Save up on your electricity bill with Solco solar water heaters.
The COVID-19 pandemic has wreaked havoc not just in Sri Lanka but across the globe. How has Sri Lanka's economy performed during the first 10 months of this year? Now, according to central bank data, during the first 10 months of this year, the trade deficit has declined to 4.8 billion US dollars. Now, if you take a look at exports and imports, exports declined by 16.7% to 8.2 billion US dollars and imports declined by 19.9% to 13.14 billion US dollars. Jan-Oct, now if we take a look at the trade deficit has declined against a backdrop where import restrictions have been imposed. Do you think this is the way to go, and the decline in the trade deficit, do you think it's sustainable?
Declining the trade deficit is a good thing, Zinat, but how we have achieved it is what we have to reevaluate. There are two ways that you can bring down the trade deficit. One is by reducing the imports, and that's what we have done here. But when you reduce the imports, that has an impact on the quality of life of the people. What we actually have to do is you can reduce the trade deficit by increasing our exports, and that's where we have to do. If you look at the numbers, you can see our exports have declined, so as our imports have declined. But our imports have declined by 19% and our exports have declined by 16%. So there's a 3% gap between the declining rate, and that's where we have achieved a trade a trade deficit better than the last year. But moving forward, this is not the sustainable way to keeping and minimizing it further. We have to improve our exports.
Now, if you take a look at the central bank statistics, Jan-Oct, there has been a decline in imports in certain expenditure items, particularly in the crude oil. There's been a decline of 1.1 billion US dollars, which is a massive saving. Now, if you take a look at other items such as spices, if you take a look at maize and wheat, food and beverages, compared to 2020, compared to 2019, there has been an increase in imports, an increase of 11.7%. If you take dairy products, an increase in 9.1%. If you take a look at vegetables, there's been an increase of 18.1%. If you take a look at sugar and confectionery items, there has been a drastic increase of 45.7%. Now, against a backdrop where the government is advocating policies to make Sri Lanka a more self-sufficient country, do you think these import restrictions have supported those policies?
In terms of bringing the trade deficit down, Zinat, there's an impact on the import controls. But if you look at the main reduction of our import bill is from fuel. That is mainly for two reasons. One is the fuel price has come down drastically because of the globally the fuel consumption has come down and the fuel prices have come down. At the same time, because of the COVID situation, our fuel consumption has come down because the mobility of the people have gone down drastically, but the fuel prices haven't come down compared to that. So that's one reason we have a saving about 1 billion US dollars from the fuel, and that's what is mainly impacting on bringing down our trade deficit. But the other side of the story is, Zinat, when you have import controls and reduction in your imports, that will also have an effect on people because they have to compromise the quality of life and the prices of the products will go up, and that's the challenge that we have to face. But at the same time, today's the global market is so competitive and interconnected, so imports and exports are two sides of the same coin. So when you bring down the imports, that will have an impact on exports as well, and that's what we have seen. At the same time, some of these commodities Sri Lanka cannot produce, cannot match the entire local demand by just producing it locally, and that's why I think there's also imports still with a condition of import controls imposed by the government from early this year.
Yes, Jan-Oct. So if the restrictions are will also lead to increase in inflation?
Definitely, Zinat, because there are two reasons that may cause the inflation. One is, of course, the prices will go up, that will impact. At the same time, when your money printing or when the money creation happens, that may also have an impact on the inflation. So I expect the inflation slightly to go up in the coming months because of the prices of the products especially in the consumer basket, will go up, and ultimately the people have to shoulder that pressure.
Now, another area that I would like to focus on is foreign reserves. Now, we know that we had an ISB repayment in October, and after repaying the $1 billion, we are now left with $5.9 billion, which is the lowest level during the past 2 years. Now, if you take a look at this chart, Jan-Oct, the reserve adequacy ratio, our 5.9 billion is way lower than the level of considered as the reserve adequacy. Do you think Sri Lanka has sufficient reserves to face a future economic shock that is apart from COVID-19?
That's one of the main challenges, Zenith, that Sri Lanka has to face in the coming future, because we have about 4 billion to 5 billion debt servicing to be done in the upcoming year, and our reserves levels are at 5 billion, and not that all the reserves can be utilized, because some of the reserves may be in the gold form, and some of these reserves maybe have collateral as some of the swap agreements and some of the other financial commitments that we have taken. So that's one of the main challenges that we have. And the real challenge would be, since we have gone through a debt, through a sovereign credit rating downgrade by all three main rating agencies, one way to build the reserves is going back to the market and building up our reserves, borrowing more money from the financial markets. But it looks like it's difficult, because we have to pay steep discounts on our, if we will go for another debt issuing, because already our secondary market bonds are being traded at a steep discount.
So if that's the case, then what other options do we have to raise funds?
Yes, one option is, I think government is expecting a lot of foreign direct investments to flow in, especially for the port city and other investments projects, and that's one way of looking at it. And at the same time, our foreign remittances have increased from about 2.7%, but there are multiple scenarios or like predictions or assumptions under for foreign remittances, because one assumption is that people are sending more money because already the domestic people have impacted their livelihoods, so people are sending more money.
But foreign remittances have increased over the past few months. So do you not think that would support inflows to Sri Lanka?
Definitely, that would support. The argument is, Zenith, that would support, but for how long? If it's a real increase, that is good. But if people are sending, if they are sweeping all their money and coming back, because there's job losses in Middle East as well, if that's the case, that could be a short-term increase. At the same time, some of the informal channels have now moved to the formal channels. That's one reason why maybe the foreign remittances have increased. Or the other possible reason is, since the local livelihoods have been lost, people are sending more money than the normal time. So those are the three assumptions.
Thank you very much, Jan-Oct. And this is the external report of the Central Bank for the month of October and Sri Lanka's economic performance during the first 10 months of this year.